So, can you really earn free money from real estate? In theory, yes. In this video I'll be explaining how this is possible with a cash-out refinance and how you can input the refinance repeat strategy into your real estate journey. Let's dive in. Right, so welcome back to your favorite robot finance YouTube channel. In today's video I will be touching on the cash-out refinance subject and how you can use this strategy to benefit you in real estate. These videos take forever to make and I only do them to help all of you, so if you could kindly smash the like button and subscribe, it would mean so much and might make me finally have the robot balls to put my face on camera. Anyway, enough of me waffling, let's jump in. So, what a cash-out refinance is basically where, when a loan is taken out on property already owned, and the loan amount is above and beyond the cost of transaction, payoff of existing liens, and related expenses. In shorter, simpler terms, you take a loan out of the house's new value, pay off the old mortgage, and then you keep the remaining value but with a new, more expensive mortgage. You're probably thinking, this robot's an idiot because you're not actually going to be making money, but what you then do is the amount you have left, you then use that amount as a down payment on another property which you will then rent out and receive monthly profit from. You can then do a cash-out refinance on this house and continue the process until you have no money left to renovate the new house to increase its value. This is a good long-term strategy, as hopefully by doing this, within 35 years you could have 3 to 4 fully paid off house and then you could just retire from this. A question you may have is, what happens if you have no tenants in all 4 of your houses and you cannot afford to pay 4 mortgages plus your own? Well, the chances of you not having 4 tenants all at once is very slim, and the ideal outcome is, even if one house is empty, the profit from the other 3 would cover the mortgage of the 4th house anyway. So, overall it sounds like a great way to grow your property portfolio and diversify your investments, and to be honest it is. Let me dive into some benefits of a cash-out refinance. So, first of all, we have the value of having a good lump sum straight into your bank. This could be useful for, say, home improvements, student loan debt, rental properties, or sending your kids to college. And the best thing about this is that this is not an IRA or a 401k, this is completely tax-free money. But, this is a big but, you have to have good credit score. If you have a bad credit score, then you could be paying stupidly high interest rates back, but if you have, say, a 740 credit score, then obviously the lower interest rates you will be paying back. I can't tell you this enough, your credit score is so important. If you want to learn how to grow or build your credit score ASAP, then watch my previous credit card growth video. So, if you're in need of a large amount of money but just can't afford to wait like 2 or more months for this to go through, the amazing thing about cash-out refinances is that they can be sorted in just 15 days. Just be organized. Have all your documents ready to go and you can get this done in just 2 to 3 weeks. Honestly people, get all your documents ready, ring up a mortgage advisor for free and just have a chat and they will tell you exactly what's needed to get this done and as quick as possible. Another big benefit that a cash-out refinance could do is take care of any debt. If you have a big credit card debt or have a student loan debt or you're borrowed money of someone, then a cash-out refinance could potentially be one of the fastest ways to get out of debt. I would definitely say, do not just get a cash-out refinance because you want a nice amount of money tucked away in your bank account or because you want to spend a year living at large and having a McDonald's breakfast every day. You will have to pay this money back and it just puts you further away from paying off your mortgage in the first place. But, if you could benefit from doing this in any of the ways I have explained, like building a rental property portfolio or paying off debt or sending your kids to college, then this could be an amazing way to do so. It's also nice to know you have this option available if you ever needed a large amount of money in the first place. So, you're obviously thinking, this just sounds too good to be true. Let me explain some cons/drawbacks of doing a cash-out refinance. Right, so, I'm sure you're thinking this is too good to be true and want to hear drawbacks and cons to a cash-out refinance, so here you go. Our first potential problem, which isn't really much of a problem but by some slim chance it could be. So if you do a cash out refinance and say end up having 4 rental properties or even just the one in your own property and the tenants move out and then it leaves you with an empty house, you have to be able to pay the mortgage. If you have your own house and that a rental and you know that you cannot afford to pay the rental house mortgage if need be, then I would recommend staying away. But, if you have say 4 rental properties and a tenant moves out of one, then realistically the profit from the other 3 will cover the mortgage of that one. Also, the chances of all 4 tenants moving out at once is like 1 in a million, so I would try and not worry about that. Our next minor drawbacks are not a problem, it's just something you need to know. So, firstly, as I previously mentioned, you will need to have around a 740 credit score to go through with this, as it is a risky procedure for a lender. Secondly, you obviously realize that your mortgage will now be more, meaning it's going to take longer to pay off. Also, you cannot just say keep the whole amount, you have to pay off your previous mortgage first. So if you take out $150,000 and your previous mortgage was $100,000, then you pay that, then keep the $50,000. So, you can't just take the whole $150,000 straight to the casino in Vegas. Our next con to a cash out refinance is if you already have a tenant living in your rental property and you decide to go ahead with the cash out refinance, you will obviously have to paying back more in the long term due to interest rates, which means you will have to increase the rent price, which may not go down well for the tenant and could result in you not having anyone paying your rent for that month. Right. I hope this video has given you more of a clearer view on whether a cash-out refinance is a good option for you. If this video has helped, please smash the like button, subscribe, and check out some more of my personal finance videos. See you soon.